Here's what's going on. It's Kyle from K Capital. It's about 8:12 on the 18th of September. Nice morning right here in the Northeast. Quick video today. I want to break down a few things in the overall market. Big news yesterday in terms of the Fed and the rate increase, which they are not doing. There's a lot of fundamental thesis around why they should or shouldn't do this, but in a nutshell, it's coming. It's just a matter of when. And really, we saw a pullback in the overall market yesterday, which, they shouldn't be really increasing the rates right now. I know everything seems great overall, but if you look at the actual fundamental data, whether that's labor statistics, manufacturing data, we're not in a really strong growth mode right now from a GDP standpoint. So for the Fed to step in and to raise rates, that would really slow things down, which is really just a product of people are going to move away from the equity markets into the bond markets because they're going to get better returns there once rates go up. It's really that simple. So that's really why you saw a big drop in the overall market, the last couple months was, that QE or that quantitative easing is going to stop. Rates are going to eventually go up. And I think, in the back of the Fed's mind, they probably realize it's not the right time to do it yet. Does it happen in December? Probably. I know everyone's really thinking that it's just a matter of time. So it didn't happen in September. The next meeting is in December. Personally, I think it happens, and that's why I think we still, overall are going to see a bearish trend in the overall market. We haven't traded below the 200 EMA for a very long time, at least held that level for a very long time. And as you can see here, it's really a big change in the overall trend. So I think it's something that, we will see a pullback in the overall market. It's just really just a matter of how bad that drop is. For the time being, this slight V correction that we saw recently here in this pattern, we're finding some bullish swing trades that I'll get to in a few seconds that are pretty positive. So we'll just be cautious with the amount of capital we're allocating to those trades. So it's really just a product of, be careful, be cautious. We'll continue to trade and follow our mental stops, but we're not going to unload a heavy position in any one stock knowing that the overall market is pretty bearish. So that said, let's get to some of the alerts. JAKK, we've been in several times over the last couple weeks. This finally broke out this week. This position I think has a lot of upside to the $12 to $15 range. Consolidated in this pattern over the last couple months and finally broke out yesterday. So, I've been predicting this for now, like I said, a few weeks. The overall trend is obviously bullish, and I think there's plenty of upside here to the $12 range, if not 15, which is where the majority of the sell side analysts have targets there. So, let's hold this for the time being. We want to add to our winners, not necessarily take profits along the way until we see a confirmation that the trend is going to reverse. So I may add to this again. One more time. We've added small positions 3 times over the last couple weeks. So stay tuned for an additional alert in JAKK. EMKR is another that had a great bullish pattern here, and what caught my eye, which again we've alluded to this a few times, is this gigantic candle pull back to the midpoint of that, and that's where we added. So we've added, I think, twice into this position. We're seeing that reversal out of this flag formation here this week. And so if we wanted to take a look at the actual technicals here, you're seeing a decent amount of resistance here, which is still occurring, we pulled back to that point yesterday. But frankly, I think we have a lot of support here in terms of the actual long-term trend. This goes all the way back to, I think, last year, if not the year before, if we were to zoom out. So we're going to hold this for the time being. We might see a slight downtick today and then a rally back up. So I wouldn't be surprised if this pulled back a little bit more. But again, we're going to hold this long-term swing trade here. The target right now is 9, which would be a great return for us. So let's keep an eye out on this guy. Crown is another one that traded pretty nicely yesterday, up slightly, less than 0.5%, but it's holding this 13 EMA line. If we want to zoom out here, we can see that the overall trend is obviously bearish. We want to add on the dips down here and then add again on the confirmation of the breakout. So we added right around this area here, I think in the 4/8. We have a nice return right now, I think of 8 to 9%. But again, I think this hits 6. So I think we're going to hold this for the time being until we get confirmation that the trend is broken. You know, you want to let your winners run and you want to cut your losses short. And that's basically exactly the trend we've been following over the last couple of years. The one concerning factor here is this candle basically signaling that the bulls and the bears are, you know, at a stalemate, so to speak. So I may expect a slight pullback here to this point. But again, we'll watch this. It's down in the pre-market right now, so it may be a concern. But for the time being, we're going to continue to hold this winner. Continuing on to our long-term swing. And again, just to emphasize, you know, we have short-term swing trades, which we hold for 8 to 14 days. And we have long-term swing trades that take longer to play out, but have the potential to be huge winners. And this is one that I think can definitely be that. So if you look at this, it's had a great bull trend back in 14, broke down the 200 EMA, traded all the way down to 16. And now if we look, it formed this nice base. So this base is, honestly, you couldn't really ask for a better setup here. And, you know, when a base goes for basically a year, that's a really strong sign that there's a lot of build-up support. And if we look at this, you know, all the factors here are basically saying that this is going to reverse, and it's starting to. And you can see it traded above the 200 EMA. It shot up all the way to 2150, and of course it's going to pull back, right? All the buyers that were in here are holding from, you know, the prior highs are now saying, okay, let's get out of this. Let's close our gigantic loss at least at a decent, you know, not rally, but a decent profit, I should say. And it pulled back, but it's starting to consolidate here in this pattern. And I think, you know, in the next couple of weeks, we should see some momentum here and see this pop, hopefully fill up this gap to 26, if not 30. Again, it might take, you know, a month, 2 months, if not longer, but these long-term swing trades can be huge returns for us. So that's another one we're going to continue to watch and hold. The stop here is, I think, 20, which is actually a little tight for this type of trade, but that's why we do mental stop. So let's keep an eye out on that. And then finally, the one on our watch list is DRRX. So we have traded this a few times. We actually had a huge winner in this earlier, I think, in the year. I forget at which point, but I think we wrote it for 40%. Obviously, that was some point in this trend here. I forget the exact date, but if you look, the setup's pretty nice in regards to the EMA crosses and the volume. So really, we found support around the 20 EMA. We bounced up. You wouldn't want to go long yet until you're above the 13, 20, and 50 EMAs in which they're crossing now. I would want a pullback more. I don't want to chase this because it's up, you know, significantly over the last couple of days, but I'm going to see how it trades today. I'm hoping it trades down, you know, hopefully to the 240 to 235 range. But we may add a small position just as a, you know, a test position to see how it trades. But my target would be 3 to start. So that's my main focus for the watch list is this trade right here, and obviously our open alerts. If you have any question on these or the overall market or anything, please shoot me an email. I can take you guys through it. But have a great day, and markets should be open soon, so stay tuned.